Friday, welcome to this channel. I want to share with you this technique that I've been using to scalp the US100. I've never spoken about it because I don't have an established strategy for it, but it's been working. I even made a withdrawal, as you can see right here. This is a withdrawal that I made, and this is a real account, my real account. If I can show you my email inbox, this was the screen confirmation code or screen money received and FBS confirmation code sent to my email. Okay, it has been working out. This thing has been working out. This is only US100, okay, and gold, but I won't talk about gold. I just want to talk about US100. So I want to show you this technique that I've been using. And please, US100 is risky ground. It's risky ground. Please, it's only for experienced traders. Don't start here if you are a new trader. This is for experienced traders. So, as you know that US100 reacts a lot at 3:30, at 3 p.m. I don't know about your time zone. For me, I use GMT+2. That is South African time, Cape Town time. Okay, I don't live in Cape Town. I only use that time. Let me start right here on the white. What happens at 3:30? Let's say this is US100. It's moving. What usually happens is that price moves at a very high momentum, okay, either upward or downward, simply. It moves at a high momentum. Now, what I noticed is that during that time, at 3:30, there are some days when price will just spike like that, very fast, okay? Those days I don't trade, but then most of the time, let's say the market was moving like this, most of the time you find that price only increases in momentum. It doesn't spike that much. It only increases in speed, moving in one direction. So right there I take a trade. And there are two ways in which I take a trade. First thing, let's say price was moving like this. And then at 3:30, I see a small spike. Usually there's a small spike, and then price pulls back and leave a wick, and then it starts pushing up. You can clearly see that the momentum is on the upward direction. Once I see that the momentum is on the upward direction, that is where I start entering trades. I'll show you how to enter trades, because you are supposed to place a trade together with its stop loss. You don't place a trade and tell yourself that you are going to update the stop loss later on. You'll get into trouble, because anything is possible right here. A spike like this is possible at any time. So if you execute a trade, you execute it together with the stop loss. So let's move on to the real charts. I'll show you the other principle. Remember, I said there are two ways in which I trade this. So what happened right here? Okay, this was at the news release. I'll use this arrow. So right here you could see the momentum of price moving up. So what you would do, somewhere right here, you would start entering buy trades, and you have to enter with a smaller lot size, because price pulls back, moves up, pulls back before it can take the upward movement. So you enter the buy trades and you put your stop loss just below the candle. Don't put your stop loss further away. You put your stop loss just below the candle, where you feel like price is not going to go beyond it. Okay, and when you place the trade, you place the trade together with the stop loss and you execute the trade. So if price spikes in the downward direction, you are safe. If it continues in the upward movement, you make your profit and get out. The second way in which I scalp US100, let's say price was moving like this, and at the news release, price made a spike to the upward movement. What usually happens is that you begin to see price pulling back. All this happens at the 15-minute time frame. You begin to see price pulling back and it gives you a red candle, and once it gives you that red candle, you start selling. Right at this point you start selling, and as I have said, make sure to put your stop loss whenever you sell. You don't even have to put it right above, you have to put it somewhat nearby, close by. You put your stop loss and you take the trade in the opposite direction, and this usually happens 10 to 15 minutes after the news reaction. So at 3:45, 15 minutes from the time news made the spike, you see price beginning to have opposite momentum, moving backward. So that's where you start entering the sell trades and you put your stop loss right there. You place the trade together with its stop loss. Don't wait to update it further. I'm making emphasis on that. So once you have entered the trades, it's very likely that the US100 pulls back to where it began from. Now here is the thing, you have to take your profits somewhere in the middle. Somewhere in the middle. Don't wait for price to come and get to this entry point. I like to take my profits somewhere in the middle, or right here, 3/4 from this is today. You can see that price pushed up. This was roughly at 4 o'clock. Price began pulling back. You would take your profits somewhere right here. Don't wait for price to come here because you don't own the market. You never know what's going to happen. So that's the other way in which I scalp the market. Let me just scroll back to see yesterday's market reaction. So price did the same thing. Even here it made a spike in the upward direction, and this candle is 15 minutes. So it took several minutes to get here. It didn't just make the spike in 5 seconds and then come back. So watching this momentum, you could enter trades in the upward direction, and when price began pulling back after the first red candle, you could start entering trades. Even before the first red candle has completed, you have to wait and see that the momentum has really changed. It is now downward, it is now bearish, and then you enter trades in the opposite direction and you take your profits right at this point. Don't wait for price to drop. Thank you so much for watching. I wish you a happy weekend.